Hello, everybody. Welcome to the show. My name is Stefan Choi, and this is Trading with Livevol. And basically, I wanted to talk to you guys about today's trading. This is where I trade my Reg T account, and I use LVX to trade. Sorry, I got a little distracted because I just realized I forgot to do something for this video blog. I'll do it after I finish it. But anyway, there is people always ask me kind of like how I use this LVX, and I want to kind of show you guys a perfect example. So it's in VOYA, and I bought 20 of these April 44 calls, right, for 140. So today I bought for 140, 10 lot, and then yesterday, if I look at historical, I bought 10 lot for 140. So let me actually go back so you can actually, then I'll click on this. So if you see VOYA, I bought 10 for 2. I don't know why it's not showing up. I'm going to load it up again. Right, so you see this 10 lot, basically I bought 10, and then I bought another 10 today. And the reason I bought it is you see the 6,000 open interest. So basically what happens is you look at this and you say, well, what happened, right? So I'm just gonna kind of show you guys exactly how I figured this out, right? So yesterday, there was this big trade that went up. I got this from this scan, right? So there's this pro scanner, and I'm not as, I'm basically not as maybe sophisticated as some of the other folks who here you can actually build your own scan right here, right? Not to digress, but you see all these variables. You can actually do very complicated scans and build your own custom scans. I really don't do that too much. I just kind of go with the high volume because I know that's what's going on. So yesterday, when I looked at it, VOYA was at the top, right? Because normally they do, what is this, average volume of 659. And yesterday, they basically, if you look at this big green arrow, they did, and you can see it up there, they did 10,000, right? 10,000 contracts. And basically what this person did, if I actually click on it, he basically traded the March 41, April 44 call spread, right? So if you look at the spread, it kind of looks like a spread, but you're not exactly clear whether he is buying the 44 calls and selling the March 41 or vice versa, right? You can kind of take a guess and you can say most likely he bought the 44 calls because it was closer to the offer price and he's actually giving up more fair value, but it's still a guess, right? So you're looking at this going, okay, well, what happened to these March 41 calls, right? So if you look at the March 41 calls, you see how there's 4,000 open interest. If you clicked on the March 41 calls, and I'll do that right now, and if I went too fast, you can kind of rewind and look at it, right? So you see how like yesterday was 4,000. You see how the open interest was created on 2/9/2015. I go back to 2/9/2015, which is it. So even if you didn't have that thing, you could take a guess, and most likely it's this date right here. And you can see that this guy bought the March 41 calls for 130, right? See how he paid 130 for 41.16. And basically, he bought this. You know, he bought it because the market was 110 and 130 at the time. And basically, what he did was he did a spread. So obviously, he bought this, and then he kind of rolled out of this spread, the Feb 40-42 calls. See this? Feb 40-42 calls. And then if you look at it the next day, right, basically, let's see if the open interest got lower or bigger. Yeah, so I don't think it made any difference on the open interest on the Feb 40-42 calls. Maybe it was just rolling out of it. And then he got long the March 41 calls for 130, right? So this was February 9th. If you look at it, February 9th is right here, right? So he buys it on this date, and today or yesterday he decides to roll it out. And so basically he's locking in his profit. I think he made over 700 grand because he paid 130 and then sold it out for 312.5, and then he rolled into 6,000 of these for 130, right? So so VOYA, for people who don't know the stock, you guys might be saying, what is this stock? This is the ING Direct, and basically ING sold like the savings website division to Capital One. The reason I know that is because I used to have an ING account, and then one day I looked at it and it was a Capital One account, right? So they sold that division, and then they kept basically this financial, advisory division, I'm assuming, and it's been on a very good uptrend. Not that this is dissimilar to pretty much the whole market, but it's been on a nice trend. And this guy's made money on this March 41s, and now he's rolling into 44s, and he paid 145 for it, 6,000 times. So the reason I like it is because I'm kind of bullish on the advisory segment of financial. Seems like the companies that, or banks that specialize in financial advisors are doing better. Some are like Morgan Stanley and such, and companies that aren't doing as well are all the other parts of banking, right? So they can't trade really. They had, bad quarter with the fixed income and so forth. But in the end, the division that's doing really well seems like the financial advisor division, and that's what these guys are, right? So I had a kind of a bullish bias towards it. And the percentile was very low. So if I look at the volatility, right? So let's look at a 2-year vol, and I'm gonna actually make this a little bit bigger for you guys so you guys can see. Right, so this red line is the volatility, and you can see how the red line, if I take out the green, right? If you see the red line, you can see how it's been trending down, and the stock's been trending up, but it's at a very inexpensive place in terms of price, right? So I look at it, and I'm like, all right, it looks pretty good. So it's low volatility. This guy's correct. I look at the overall market, right? And the overall market is very bullish. So let me actually pull up the chart, right? So I look at the SPX, looks pretty bullish, and this was yesterday. So on Friday. So even though we had the sell-off, basically it was still kind of within this. It didn't break anything, and it just looked like maybe the volume ran out yesterday. But with NASDAQ so close to 5,000, you had to have thought that, they were going to hit this 5,000 first before it retraced down. But anyway, that's just my personal, thinking, right? So the VIX, I check out the VIX, and the VIX was also going down. So even though the SPX was going down, right, the VIX was also going down, which made me think like people weren't really that worried about that sell-off, right? So coupled with that, you know, I look at the financials, and the financials were kind of consolidating, looking like they were ready to make another move up. So all those factors kind of got me to buy VOYA calls. And one of the things to really understand about order flow is you're not actually just trading because of the order flow, right? So you're not like looking at this and you see that this happened and then you just go piggyback. That makes no sense, right? It's like anything else. You use fundamental, you use technical, you use you know, the overall market. So the overall market, I generally, you know, account for like 50% of the move. So like if you don't think the overall market is kind of like stable going up, it's very hard to kind of bet in that direction, because I feel like if the market goes down, no matter how good the stock, the chances are it's going to go down with. Then there is like the sector and then the individual stock as well, right? So in terms of the research, if you look at VOYA, they had pretty good fundamentals. So you can see their PE is about 5, their forward PE is 12, you know, and you can see the earnings growth is pretty good at 11 and 10, right? Which kind of matches the forward PE, which is not too bad. And you can see that you know, they're doing pretty well, right? And their price target is in the high 50s, right, or middle 50s or low 50s. So all those things together got me to buy those calls. Now it's the 44 level, so they're in the money, and essentially the volatility is pretty low in my opinion. Not that the stock moves too much, but you know, I'm making a long-term play. If the stock goes to so I'm thinking the stock will make another leg up, maybe go to the, you know, $47 range or so, right? I'm gonna have this turn into $3 or higher. So I'm gonna make more than 100% return on it. And these aren't even March expiration; these are April expiration, which means I have 45 days to expiration, right? So a month and a half for this to go up. I thought it was a pretty good trade, so I did it. So that's kind of how I use option order flow to trade using the LVX. Now, one of the things that's awesome is see how like I actually went to each day and was able to look at it, right? Toggle, look at it. I see all the end of day option prices. I see all the largest trades. I can go to the next day, look at the open interest change. You know, it's an awesome tool, right? Not only that, I can actually go to the strike. I click on it and see like, okay, this was created yesterday, the March 41. I click on it and immediately, you know, you can see it right here on February 9th. This guy did this trade to open up the interest, happened to be the same amount, and now he's closing it for over 100% gain, right? So this kind of information is invaluable. So many of the traders, professional traders out on the floor, they have special relationship to get this information from their from people on the inside, and the thing that kind of got this to the electronic trading platform was because all the options used to be exclusively traded. So you kind of knew every trade that happened, especially the large ones. But now that we have like 9 or 10 exchanges, it can happen anywhere. So this was a way of keeping track of the order flow without actually having to be on every exchange. So, you know, I mean, it's just awesome, right? So I can see all my trades right here, right, that I did today. I bought a 10 lot. So you can see like these 1 lots going and see how they were selling it on the bid. Well, I was the bid at the time, right? So I didn't want to chase it, right? Because I knew 140 was pretty much the price I wanted to pay. So I just stuck it in there. If I got filled, that's great. If I didn't, well, I own 10 anyway. So, you know, I'm good to go. So that's it on my trading. So if you can see, I'm down a little bit on this one, but it was because I took out $10,000. So what I'm doing is I'm going to try to take out 10,000 each month. Not sure if it's going to work. I don't want this account to go below 110. I probably wouldn't take it out, but you know, I've taken it out for about 3 months straight, and it's you know, I kind of want to just try to see, you know, how serious I can take this. And it seems like if I'm taking out 10,000 a month on a $100,000 account, that's kind of where I feel like, you know, you're taking this seriously and where you can maybe have a future. But right now, if you look at it, you know, I haven't done that well since beginning of February, and I think I was just making, you know, not so great of a bet. So, you know, I was short XOM, I got out of it, and then basically, you know, XOM went down today. But, you know, hopefully my trading will get better. I do have one big trade on today in SPY. So I know you guys are probably wondering what my strategy was to get that. So if you look at this, I bought 100 of these 210.50 call strike, and it expires March 13th. So this is kind of a one-day play, and the reason I did that was because I felt like the SPX was it kind of bounced pretty hard from the little sell-off last week, and it looks like it's ready to make a new high, right? So I'm gonna try to play this one-day gap. So it's similar to like this day, December 2nd to 3rd, where it just gaps up a little bit. I'm kind of hoping more like this day, February 2nd to 3rd maybe, but you know, that's asking for a lot. But if SPX goes up by 10 points, which is about, you know, roughly 0.5%, you know, I should make 6,000 or 7,000 on that trade, right? So I put up 24,000. I'm trying to make 6,000 or 7,000, but I have a very tight stop. You know, when it opens and it doesn't look like it's going to do that well, I'm just going to cash out and call it a loss. So it's something I've been trying for the past few months, and it's worked out well. So like, you know, all this has been doing that kind of strategy where I keep something for a very short time. The reason I did that was, like I said, I didn't have enough capital. So if I had like maybe $1 million, $500,000, it would be a different story. I might do some front spreading, get a PM account, you know, which gives me more leverage, and then basically front spread my way, and I can probably get enough decay in front spreading to make up for that. But with 100,000, it was a little more difficult, and so I'm trying a different strategy, and probably a strategy that's more in tune with most of the traders out there who start their own account. It's not like you can actually go out there and just start selling options because you think they're overvalued and then hope they're going to come in and close it out the next day, right? So I'm trying this. Not sure if this is actually a viable way, but I'm using the VIX, the SPX, all the other components. So for example, XLY is the discretionary. This looks bullish. XLP, you know, XLE is the weakest component of it, but you can see it's at the bottom range of the band, and it can actually bounce tomorrow. And then you have XLF, which is consolidating. XLK looks pretty bullish. It actually looks like it's on a slight breakout, right? Then you have the industrials, which also is very similar to the SPX itself. And then you have the basic materials, right? Also the same way. So all these charts combined just seems to me like we're going to go up. But as you guys know, my risk is very tight. So sometimes what's going to happen is tomorrow this might go down, open down, and I'll probably close, and then it might run up. So it's happened to me quite a bit. But also when it actually turns in your favor and the market opens up, let's say tomorrow the futures open up like 10 points, I have a good chance of making like 7-8 grand on this trade, and then I can close it. So I just have to do it where my my hit rate is such that you know, when I lose, I try to push. So I'm not doing it at a dangerous time. I'm trying to pick my spots and trying to do it at the most opportune time. And this seems like a pretty good time. It looks like, if anything, it might retrace back to the 7-day moving average before it goes up again. But I saw a lot of stocks that had this kind of momentum where it passed the 7-day moving average, and it looks like there's an uptick here coming up, and that's what I'm betting on. But we'll see. I think in my past, I think my hit rate's actually been, I want to say it's only like 30%, but with that 30%, I was still able to make all this return that I have, which makes me think maybe I'm onto something, right? So, but I could be wrong. The test case is only 2 months, so who knows, right? The one thing that's important to remember is that the way I battle the decay. So like, if you can see, I'm buying the March 13. They have massive decay. So the way I'm battling the decay is I'm only holding this for 1 day, right? In fact, I'm basically holding this overnight is my real decay. And I'm not saying, hey, I'm going to hold this till end of expiration, because your decay will kill you, right? But why am I buying this kind of close to expiration option if I'm worried about the decay? Well, the thing is, you get the most amount of gamma from this, right? So if you look at these, right, which are 66 delta, if SPY goes up basically 1 point, which essentially would make it 209.50, the deltas will actually go up 8 points on this, which is like tremendous amount of gamma compared to if you bought, let's say April 17th, right? So if you bought April 17th, you know, 66 delta, not only do you have to put up basically, you know, 60,000 almost for the same amount, even if the stock goes up $1, you only gain 3 deltas, which means your gamma is only 3, right? So 3 versus 8, which is huge difference, but obviously there's much more risk. So this is a lot more aggressive, a lot more dangerous, and basically, you know, it's dangerous, but your rewards are bigger as well. So since I'm kind of a gambler, this seems to kind of fit my style. I also am not that good at day trading. I seem to always like buy at the top of the day and sell at the bottom of the day. My strategy was to kind of put this on at the end of the day once I knew that this was how the chart was going to be technically, right? So sometimes I'll buy it up here during the middle of the day, and then it'll fall down, and it'll end up below the 7-day moving average. And if I saw that, that would be actually pretty bearish. And I've been doing that ever since I've been trading. So I'm thinking maybe what I should try to do is put it on at the end of the day, because that way I'm actually getting the full day's worth of technicals before I should put it on. So that's about it. I'll talk to you guys tomorrow to see how this trade worked out. It's pretty much the only trade I have. You know, as you guys know, I have a couple of long-term trade. Yahoo, I'm long calls, and the dollar, I'm long calls. I replaced stock, so I sold the 200 shares of stock, because I think I'll have better leverage owning these calls, the Jan 24 calls. I'm hoping it'll get up to $27 and I can double my money. But you know, at some point I might actually sell some of these upside calls. But I'll see. because it gives you less flexibility if you don't own the bullets to sell. Other than that, hope your trading goes well. I want to talk to you guys more about dividend stocks, just because I think they're kind of a good way to go. I have all this money in savings that's basically burning a hole, and I'm trying to figure out a systematic way of investing some of it in a dividend stock with a call option. That way, my interest rate on the money that I'm actually putting in. So I'll kind of, it'll be like my pseudo savings account, but it'll actually have some return on it. And I'll give you like the list of stocks that I'm looking at. So hopefully trading goes well. Hopefully SPX pops like 20 points tomorrow morning, and I can sell out for a big old profit, and I can give you guys some happy report. Otherwise, but that's 30% chance, 70% chance that I'll lose or break even. But cross my fingers, knock on wood, hopefully it'll work out. And so I'll talk to you guys tomorrow. I hope you guys had a good trading day. Take care.